What if I told you that everything you think you know about making money is wrong? We're taught to work hard, save what we can, and hope for the best. But that's not how wealth is built. That's just survival. The biggest lie is that you have to trade your time for money. The truth? You can make your money work for you. In the next 6 minutes, I'm going to reveal the 3 core theories behind how to earn money with investment. This isn't about risky stock picks or get-rich-quick schemes. This is the foundational blueprint, the financial education you were never given in school. And the third theory is the one that separates the amateur from the pro. So stick around. Let's be honest. The world of investing feels like a private club with a secret language. Stocks, bonds, ETFs, crypto, it's a fog of confusion. You hear stories of people losing everything, and the fear of making a mistake is paralyzing. So you do nothing. You leave your money in a savings account, where it's slowly eaten away by a silent thief called inflation. This inaction, this fear, is the single biggest barrier to building wealth. But what if we could clear that fog? What if we could replace that fear with understanding? That's what we're going to do today. We're going to start with the single most powerful force in finance. Albert Einstein reportedly called it the eighth wonder of the world. It's the principle of compounding. And it's your secret weapon for how to earn money with investment. Here's how it works, explained simply. When you invest, your money earns a return. Compounding is when your returns start earning their own returns. It's a snowball effect. At first, it's slow. Almost unnoticeable. You invest $100, you make $5. Big deal, right? But that $5 is now working alongside your original $100. The next year, you're earning a return on $105. And so on, and so on. Over time, this creates an explosion of growth. This is how a small, consistent investment can grow into a fortune. It's not magic, it's math. And the most important ingredient? Time. The earlier you start, the more powerful this force becomes. This is the core engine of how to earn money with investment. It's not about timing the market, it's about time in the market. Okay, so compounding is powerful. But what if the one thing you invest in fails? This is where the second fundamental theory comes in, diversification. You've heard the saying, don't put all your eggs in one basket. In investing, this means spreading your money across different types of assets. Think of it like a sports team. You wouldn't build a basketball team with only centers. You need guards, forwards, a mix of skills. It's the same with your investments. Some parts are for growth, like stocks. Others are for stability, like bonds. When one part of the market is down, another might be up. By owning a mix, you smooth out the ride. You reduce your risk without necessarily sacrificing your potential returns. This is a core concept in modern investment strategies. It's about building a resilient portfolio that can weather any storm. It's the defense that allows your offense, compounding, to work its magic over the long term. But even with compounding and diversification, there's one final piece of the puzzle. It's the one thing that causes most beginners to fail. And it has nothing to do with numbers, and everything to do with psychology. The final theory is about mastering your own mind. It's about understanding the crucial difference between risk and volatility. Risk is the chance that you will permanently lose your money. That the company you invested in goes bankrupt. Diversification helps protect you from this. Volatility is different. It's the market's mood swings. It's the scary headlines and the red numbers on the screen. The market goes up, and the market goes down. This is normal. It's the price of admission for the long-term returns that stocks provide. The amateur investor confuses volatility with risk. They panic during a downturn and sell at the bottom, locking in no losses. The professional investor understands that volatility is an opportunity. They see downturns not as a crisis, but as a sale. Developing an investor's mindset means accepting volatility as part of the process. It means staying disciplined, sticking to your plan, and thinking in decades, not days. This mindset is the ultimate key to how to earn money with investment. You can have the perfect strategy, but without the right psychology, you're destined to fail. So, let's recap the blueprint. 1. Harness the power of compounding by starting early and being consistent. 2. Protect yourself with diversification. And 3. Master your own psychology by embracing long-term thinking. This is the theoretical foundation. This is how to earn money with investment at its core. It's not about being a genius. It's about understanding these principles and having the discipline to apply them. You've just taken the most important step, seeking knowledge. You've started to clear the fog. If this video helped you, click that subscribe button, because we're just getting started on this journey to financial clarity. And now I have a question for you. What's the one thing about investing that still confuses you the most? Leave a comment below. Let's learn together. Thanks for watching.